Thank you, Alicia. Next up, please help me welcome Sean Cleary, CEO and Director of Strategic Resources. Strategic Resources is advancing the Blackrock Vanadium and Titanium project in Quebec with a vision to support the clean energy transition through the critical mineral supply. Please welcome Sean.
Thanks. Good morning, and thank you for attending the presentation of Strategic Resources. We are a public company listed on the Toronto Venture Exchange and focused on developing a Canadian green steel supplier. So we have a significant project here in Quebec as well as in Finland. Today I'm going to focus on our project in Quebec, which is our flagship project known as the Blackrock Project. So within the Blackrock Project, we have a permitted iron ore pelletizing facility that we are currently finalizing engineering on, going to FID later this year, early next year. This is located at Port Saguenay in Quebec to produce 4 million tons of high-purity DR-grade iron ore pellets. We have, for phase 2 of the project, already permitted the DR furnace that will be installed at Port Saguenay Industrial Park in Quebec to produce about 750,000 tons of high-purity HBI DRI for electric steelmaking. And finally, in phase 3, we have the fully permitted open pit mine and concentrator at Chibougamau in Quebec, where we will produce a concentrate that will get transformed at Port Saguenay to produce pig iron, vanadium slag, and titanium slag. So this is a picture of the wharf at Port Saguenay. Currently, we have an industrial park that has been built out at the port. This is a Ports Canada port, so it's a federal public port, and we have the long-term lease on the core portion of the industrial park at the port, where that will be the site where we will install the 4 million ton iron ore pellet plant. And the reason why we're really focused in this area on high-purity iron is because electric steelmaking requires high-purity iron. It requires this iron to be pelletized, so therefore that's phase 1 of our project. And then those pellets need to be transformed into directly reduced iron or hot briquetted iron, which form a portion of the ingredients for electric steelmaking. And then finally, in phase 3 of our project, we'll produce high purity pig iron, which is also a key ingredient for electric steelmaking. And at each stage of the development of our project, at each phase, as we introduce each of these products, the pellets, the DRI, the HBI, and the pig iron, it has increasingly higher margins. So the idea is to take a very plentiful supply of iron concentrate that's produced in Quebec and upgrade this and transform this into ever higher margins. This is great for the region, and we're seriously under capacity in terms of pelletizing capacity in Quebec. So this is a map of the iron ore producing region in Quebec, typically known as the Labrador Trough. We have in this area about 75 million tons of iron ore production per year, and we have currently about 25 million tons of pelletizing capacity. And as the steel industry moves towards electric steel making transition, more and more of this iron ore concentrate needs to be transformed into high purity pellets. Right now in Quebec, we have a couple of projects that are going on to produce even higher iron ore concentrates, and these are the concentrates moving from about 65% iron ore contained in the concentrate up to around 69% iron ore contained in the concentrate. These are the concentrates that will be ideally suited for transformation for the green steel transformation. So at Port Saguenay, this is a very strategically located port. We have a deep sea port with access to both the Great Lakes region as well as the Atlantic seaborne trade. And at Port Saguenay, we also have, interestingly, access to low-cost electrical power within the industrial park that's just been completed, as well as natural gas. And you really need natural gas for the conversion of both clean green iron ore pellets, as well as DRI and HBI. You can't do it without natural gas. So, and within Port Saguenay, we have a very well-developed industrial area. Of course, this area is being hit hard because of the Trump administration tariffs on aluminum today. Rio Tinto is the largest employer in the region. So one of the things that needs to happen within the Saguenay-Lac Saint-Jean area is a diversification of its mineral portfolio, and moving to iron ore, which is Quebec's #1 export, is a very easy and value-added way to help diversify the industrial base within the Saguenay region. So this is the same sort of photo at the top that I showed earlier in the presentation, which is the wharf at Port Saguenay. And then the picture below is the industrial park that has now been built out, sort of at the top of the hill. So it's located about 1.5 kilometers from the actual wharf. And currently this is being connected by conveyor systems. So the port, in partnership with the government of Quebec, are installing a two-way conveyor system to enable concentrate to move from the wharf up to where the plant is to be located, and then the pellets back down to the wharf for shipment, either into the Great Lakes or out into the seaborne market. And this is the location of the wharf and where the conveyor system is going to commence. And this is an overhead shot of our wharf going, and then the conveyor system going up to the stockpiles, which will be located at the top of the picture, and then a small conveyor system over to the pellet plant, which is located at the bottom of the picture there. And this is standard technology. There's nothing new about pelletizing iron ore. This is being done for over 100 years. However, the major strategic advantage of Port Saguenay is the access to natural gas, which we don't have in Port Cartier or Sept-Îles and the Labrador Trough. And others have looked at how to increase the capacity of pelletization in the region, and have recognized that you really need access to a natural gas pipeline. This really can't be done with LNG. It can't be done with other types of fossil fuels in a way that can get permitted, that is clean and green. And so that's why Port Saguenay is the obvious location for this type of industrial project. Okay, so late last year we signed a pellet feed supply agreement and pellet offtake agreement with Javelin Global Commodities out of London. They're one of the main players in the trade for these types of products. And along with that, so this was a 10-year deal that will commence once the plant is up and operational, which is expected to be in 2028. And it comes with a $150 million working capital line of credit. And one of the questions we get from investors and interested parties that are new to this area of understanding the green supply chain for steel production is how much DRI is going to be available for for this market, and what is the expectation in terms of the growth of the market. Because electric steel furnaces are really scrap melters. So the main ingredient going into furnaces that are run on electricity, electric arc furnaces, is scrap iron and it's scrap steel. The problem with those ingredients is that they contain contaminants that you cannot easily remove physically. So they have to be diluted with what we call virgin iron units. So that's why we're so focused on the production of high purity virgin iron units like DRI, HBI, and pig iron. And this is a chart of forecast chart by one of the leading consultancies to the steel industry globally. And they're basically showing that in 2023, the world globally, we produced 136 million tons of DRI. And what is the expectation for that, which is significant growth as we have more and more transformation to electric arc furnaces, basically doubling and tripling over the next number of years. This is the market where we want to play, you know, and it's a significant market. So, you know, what is our production at Port Saguenay going to mean? Well, in phase one, we're producing 4 million tons, so less than really, you know, 2, 3, 4% of current DRI pellet feed that, you know, on a global basis. So it's a meaningful amount in terms of dollars and cents, but it's not going to change the market. And we're really focused on the high purity end of this. And so when we look at what is the pellet premium compared to the concentrate price for DR grade pellets, we see that, you know, on the long-term mean, it's about just over $50 per ton. And that's the margin, you know, after taking into account our operating costs, which are expected based on the feasibility study work that's been done to date, to be about just over $16 a ton. So we have a very nice margin business here that we can operate as phase one of the Blackrock project. And these are some of the numbers that came out of the study that was completed to date. We are working towards finalizing these numbers. In the next, you know, couple of quarters, we will complete a full feasibility study on the 4 million ton plant, and we'll be publishing that feasibility study. And in line with, we're very close to filing our environmental application for some, we've asked for some changes to our existing certificate of authorization. So we're going through a process with the government around this, which is going to take approximately 6 to 9 months in total. So overall, we should get to a final investment decision sometime early next year. And this is our project schedule, the way we have it right now. We would, you know, basically, we've completed the feed agreements. We have some collaboration agreements. One we've signed with Takora that operates the Scully mine up in Labrador City, and we're working on a couple of other collaboration agreements. We'll complete the feasibility study in the first half of next year. We are already working on the debt and equity raise for phase one of the project. So CapEx for phase one is just under $500 million. We've hired Societe Generale on the debt side. That's moving along nicely, and we're in discussions with some of the big pools of capital to round out the you know, the total capital that will be required for the $500 million raise, which will happen next year. And then construction and ramp up, it looks like it's going to be about 24 months, so we expect that we would be fully ramped up by the end of 2028. And, you know, we're well sponsored. We have a significant ownership by the Quebec government, represented by Investissement Quebec, as well as Orion Mine Finance out of New York. Ross Beatty and the Lumina Group are significant shareholders, as are the Cree Nation government, where we have a full project IBA in place with the Cree, and we also have development agreements in place with 3 different bands of Innu. So just in summary, you know, phase one, as I mentioned, 4 million ton a year iron ore pellet plant located at Port Saguenay, very, you know, significant. We can produce a clean, green, you know, lower CO2 emission type of iron ore pellet for the green steel industry, which is growing. In phase two, we'll forward integrate, install the DR furnace. In this part of the project, we'll produce about 750,000 tons of high purity directly reduced iron. And then in phase three, we would backwards integrate, open the mine, produce a portion of our own concentrate, and that would add pig iron, vanadium, slag, and titanium slag to our product mix. So that's the overall project, and that's what we're working towards. Thank you, everybody.